Hello and welcome to episode 34 of the Money Talk. And it's almost coming on 9 months of starting this amazing show. And today we've got a very impressive guest, somebody that has done something very unique in India, and we'll get to talk about his journey. So without further ado, I would like to welcome Abhishek Agarwal of Rockstud Capital to the show. Abhishek, welcome.
Thank you, Anirudh. Pleasure to be on the show.
So I know there's a lot of things to talk about, Abhishek, but you have set up India's first hybrid fund, which invests in startups and listed equities. And I think for a long time, many people on the show and many people that are my investors and prospective investors have always asked the question that why listed and why startups. And today, I hopefully by the end of this hour-long conversation, we will have at least some insights from your side.
Sure, I'm hopeful that I should be able to give some sort of clarification. It's the same question I also get asked by all sort of investors. So yes.
Fantastic. So Abhishek, let's get started. You studied at HR college. You're a Bombay boy overall, and studied HR. You went to Lancaster for a couple of years, and after doing a master's in science, you came back and joined an investment firm, Pioneer Investment Corp. So was like why the switch to science and then back to investment?
So actually, it's a master's in science of MSc, so Masters of Science in Finance. So basically, I've done my master's only in finance only. But the way how it's supposed to
Acha.
be written as complicated is Masters in Science in Finance. That's the full form of MSc. Not everybody knew that. I got to know only once I finished it.
Okay, okay. So in a way, I get it now. I was like, science? Why would Abhishek study science all of a sudden? So you joined Pioneer Investment Corp, right? And I think that was your role was a research analyst. Did you always know you were going to be in investing?
Well, yeah, I mean, to a certain extent, yes, because you see, it also comes from my family background. Just to add that my uncle, who's based out of Calcutta, still runs a company called Fortune Interfinance Limited, and they are basically brokers of, in equity markets, having a license of NSE and BSE from 1994. So that way, if you look at,
Right.
my father, my uncle, everybody was investing into equity markets, and they were associated. So probably what I've seen in my family that only inspired me to actually pursue something, from education point of view, doing my masters, and then of course following the course and joining as a research analyst.
I see. I see. And then after I think you were specializing in the cement sector while you were there. Any reason why cement?
Yeah. So basically, the way how it happened that, when I came back by December 2007, and we all know that the biggest crisis of all time in financial markets came all together in 2008. I mean, of course, that time nothing actually happened in front of me. So, with few tries, I managed to get into Pioneer Investcorp, and the cement sector actually came to me as the option they gave to me directly. It was not something that I wanted to do it. It just came because the earlier analyst actually left, and since they were having a team of at that point of time about 25 analysts covering all possible sector, cement sector was the one sector which the analyst left. So I came as a replacement for that, and of course having no knowledge about cement sector, etc. So I had to really quickly pick up a lot of things, and learn quickly from what the previous analyst left over. So it was quite interesting, and by that time I was ready. The mother of all crises came, the subprime. So it was quite interesting. I can tell you that
Did
those people who
did you get a
actually saw
chance to meet any promoters while you were covering the sectors?
Yeah, I managed to, I mean, not specifically promoter by going to the office, but those times they used to have a lot of analyst meets, etc. So that was a opportunity where you can go and actually meet the management in totality. Otherwise, having a couple of calls, specifically with certain companies which I was covering. So I managed to have those calls, and again, it was quite engaging. I mean, if I can take some names like JK Cement, I reached out to them. Dalmia Cement, I was covering, and there was some interesting conversations. I still remember the way it really gave me a lot of insight, like how typically an analyst is looking things and how typically the founders or promoters or the management is looking. So it's, of course, as I said, that year was quite eventful. So yeah, it was quite nice. I managed to
So
meet
what was the
some of the.
difference? That's a very interesting topic, right? Like, what was the difference between how an analyst looks at a company versus the management? What was that that you found?
I mean, the way how at least I would see, surrounding, my peer group, the entire assumption that you understand better than the management is one funny thing which I find most of the time. Just because you are able to go through couple of reports in the industry, or probably you good at making some valuation reports, etc., doesn't really make you, you know, understand everything what goes into financials. Right here, my role was understand the company and do the projections, and then ensure that projections are then rechecked with the management so that things are in order and we can question them whether these numbers are able to achieve or not. Whereas a management, they are not looking from that angle that what would be my target price eventually, on your assumptions. They are looking more from the fundamental point of view, that how the operations are run and what kind of challenges are they facing in terms of actually getting that growth. See, the point is, me as an analyst
Hmm.
putting something on Excel sheet and putting some kind of growth number gets a number. And then I might question the management, okay, get me this number because your peer group is actually getting these kind of numbers from that region. But that's not the way, right? End of the day, you can't build a model or business out of just doing financial modeling. It also has to be understood what is happening on the ground. And when you actually
Correct.
understand a lot of things on the ground, that is the time where you actually can say that you're becoming better. So, analyst sitting in an AC room might not be the best way to actually question, the typical management. And I have seen a lot of my fellow people that time when we used to go for this analyst meets, and people used to ask all kind of questions to the management and in such a confidence, as if they are the fucking CEO of the company. Sorry for the language, but but yeah, I mean, it makes like that entire air in terms of asking the management. You get excited. You get excited when people are talking to such level, and you think that okay, now you are in that position. So it's a little funny, but to me, I mean, I took it the way when I got some couple of conversations where management actually showed me the mirror and said, "Ki, buddy, you're still learning, and this is not the way how you're supposed to do things."
You're still very young, but very quickly, in a couple of years, you went from the analyst side of the table to now coming on the management side of the table at Fortune Interfinance. What was Fortune Interfinance?
So basically, after that 2 years of my journey, I was there for 2 years, and of course, post the debacle of 2008 and continued till 2009, things were really slow in the equity markets. So I felt that, probably, it will take probably another couple of years before this thing will come out, and me as an analyst shining in the market would take years. So now let me, take a step forward. And that's the time when I decided to join our family business. As I said, that my uncle, had this NSE and BSE license, but the main business was basically catering to the HNIs and prop book, right? So we never had
I
any kind
see.
of research desk or institution. So I thought this is the learning I had. Let me put across now and build a business. So I wanted to replicate a part of that business because at Pioneer, they had a full-fledged broking house, right? They had FIs, they had DIs, they have all kind of desks. So I wanted to set up more of this DI focused kind of thing. And when I decided to do that, I managed to actually set up a team and went on to actually have 15 to 20 PSU banks as my clients over a matter of
Oh,
I
wow.
would say 15 months. And within 15 months to crack this kind of people is not easy. I mean, people typically would take maybe 5 to 10 years actually to build something.
Yeah,
So
cracking
yeah,
institutional desks is a very tough business.
yeah. I
So,
only managed to got the PSU banks and not the others. I remember I met Mr. Sunil Singhania, and one of that time he was the CIO of Reliance Mutual Fund, and again I was trying to pitch him to become, to make us the broker
man,
and all. And again there was again quite interesting. I mean, see, the point is, the end of the day, a person, whoever he becomes, is a matter of the journey he takes. So I was quite lucky enough to meet some people of having no background, but actually to meet and able to learn something very, very specific. So I remember some conversations which he suggested, and of course after that, the journey again changed. So yeah, that's where the fortune was doing. basically catering to mainly these clients.
And like when you before you began your journey with startups, and I think that is going to be the crux of our conversation today. I wanted to understand like how was it different trying to set something up? It was like an intrapreneur position, right? You were trying to set it up within a family run business, and it's usually not very easy to make family or family run businesses change from the inside out, especially when you're dealing with institutions which have require systems and cost to be put up. What were the challenges there, and how did you make that happen?
No, huge challenge. I would say that that was the first taste where actually I understood that what entrepreneurship is all about. Although one can say that I was into getting into family business, but honestly, it was as good as having nothing because I had to set up the entire Bombay office, and of course setting up the team, and then in that to convince those people, and then do the business. And I remember after having these clients, it took me 6 months to first get an order to execute in our broking business. So the point was that it was not easy. They had altogether different requirements, which probably I was not able to understand as only an analyst. So only understanding one role doesn't make you run a business. That's what one big learning I got, and it was not at all easy to change anything internally. What already the way how our business was running focused only on certain elements. So honestly, trying that for 2 years, and of course there are so much of that trade gap, etc. I decided to focus my energy completely on investments, both in equities and startups through my own personal capital, because I realized that nothing is changing as far as a the way how these PSU banks operate, their own nature of expectation is concerned, and b of course internally as a family business, there's a constraint in terms of infusing capital and to actually build, because there's a lot of technology which used to require. It's not just about executing an order on a a platform. It is much more than that. You need to have investment team, etc. So and plus brand, right? I mean, I remember that time I understood the power of brand, and I thought, let me just try to put focus on. And successfully, I managed to crack and went to do the to do live shows with almost all possible business news channels. At that point of time, my age was around 29, 30, and probably in that 2 years, I would have done more than 150, 200 interviews just to build Fortune Interfinance Limited as a brand. And the funny part is, despite having that kind of you know uh, arrangement in terms of featuring, it was not converting into business. So the learning, what I'm trying to say, even in marketing, if you look at startups, it's not that you throw money in the market, you get the viewership. And I had the viewership. I had certain shows which I was doing on a weekly basis, but it never translated to any kind of business and broking. So hard way learned, and then of course the
Interesting.
journey continued in different things.
So now I think the moment we've all been waiting for, but I wanted to, you talk about your investing journey. By 2017, you're already invested in 24 startups, and you had invested a nice sum of money there. But your first startup was this company called Quench Library Solutions. So can you tell a little bit about how did you choose this startup, and what was this investment all about?
It's very interesting, honestly. I mean, you're the first person who's asking that what went into that. So the thing was that after becoming the angel investor at IN, you know, when I used to go for these pitches on a monthly basis, and when I used to hear his ideas, it never used to sink in, the way, because those are the ideas which even today when people look at those startups and say it's a loss making businesses, where is the business model, etc. So it was so early, right? And I am coming from a listed equity background, and looking at P&L, balance sheet, annual reports, it was not making any sense, right? Although the ideas were quite exciting. So it took me quite a journey actually to make my first investment. And that too, how it came, I was never sure about any, like, for that all 6 months, although I had some startups which I felt like it's nice, but I was not very sure to put my money and bank on that, because, I was not fully convinced on that. By the time that event came, that Quench, something like this came, it was a secondary sale. It was not even primary, because one of the founders wanted to take a secondary exit. Now, because there was a, in SHA, there was a term that you first have to offer to your existing investors. So that bite actually came to IN investors. And considering that IN typically that point of time used to offer to the network, that is all the investors, if, because all the current investors were there, now it has to come to the new investors. So that bite was close to, I would say, 1.5 CR. Okay, that 1.5 year was the total amount which was going for a secondary exit. At that time, it was a fastest finger first kind of thing. So basically, whoever sends the mail first would get the allotment.
Yeah. Or on the app, you had to get on the app at that time.
No, no, no. The app was never in the picture. That time it was much before that app era. So you have to send a mail to
Okay.
Padmaja,
Okay.
and then whoever sends the fastest mail reaches to the inbox and the commitment, it will go. It was not pro rata. It was straight away as you commit, and if the bytes get fulfilled, then it's done. I'm just talking about the initial days. Of course, after that there was a lot of reiteration which happened, but that was one thing. Now that was another interesting thing. What happened that at that point of time, Rehan Yar Khan was actually raising money for his own VC fund, right, or IS Ventures, and coincidentally he actually came to our office as pitching us for being as a LP. So all that discussion happened, and somehow because I had the information that because I was evaluating Quench, and I've gone through that shareholder agreement. In that, the shareholder was one of the shareholder was Rehan Yar Khan. So after 1 hour of meeting and Ori's discussion all happened, and when he was leaving, I just asked him that, listen, I mean, you are a guy who's invested in, Ola, and of course, I know that Rehan that time that he was a quite a investor. I asked him, what sense you have for Quench, and it was this, I was leaving him to the lift, and he said, oh, it's a good company. If we get an opportunity, we might consider through our fund, but yeah, it's a good thing, and that's about it. And he left, and on the next day we were supposed to give our commitment, as there was a particular time which used to like open. And I remember 5 minutes before 7 o'clock was the time when it was open. At 6:55 p.m. I was ready with my mail. The moment 7 o'clock hit, I put the entered button, and next day I got to realize that only 5 people got that allotment, and I was the fifth guy. And the sixth guy was Sanjay Mehta, who missed by probably half second. And I
Oh
got
wow.
that thing, and I got the entry. So this is the first investment, entry
Oh
where
man,
where
this sounds like a T20 game almost that was going on.
look at the people,
Wow.
the list of people who were looking for that bite. The half second later, it was Sanjay Mehta. So it was interesting.
So,
First deal
so
was very
what
interesting.
what what was Quench? What does it do? And where is that company and how is it doing today?
So originally the name was Quench Library Solutions. They were basically focusing on this HR solution to the corporates. So it's a business similar to US, a company called OC Tanner, who are the biggest in this space. And that's what they were doing. Sundar was the founder, and of course along with him there were another three, and all where I am pass out. And they were like having this very novel idea that when you are going this corporate, you want to incentivize your team. Right now the structure is quite broken, right? If somebody has to, gradually improve to become a manager, one has to read the books, etc. So they actually followed the Amazon model where somebody can actually order a book through the system and read, or like you as a boss, you can, actually ask your team whom you think is going to be the next leader, can ask them finish, let's say 6 books in that 6 months, and for that you get rewards, right? And that rewards again in the system can be converted to buy some things, whatever you prefer. So it was a rewarding model. It's just circulating inside the corporate, within the corporate circle. So they had all possible MNCs, based out of India, and of course later on they have done a lot of other things. As we speak, I mean, about 1.5 years ago, they got acquired by OC Tanner. So that was a time when we got the exits. So it
Oh,
was a good
wonderful.
outcome, and yeah, I mean, and of course the
So,
market leader actually acquired this company, so it was good outcome in that way.
so in a way, you're one of the few where your first investment actually returned money. My
Yeah.
first one, my first investment actually bombed. It was a fantastic company, but unfortunately bombed. So wow, so that was a good initiation to investing.
Yeah, I managed to make about 4.5x in 4 years' time, so I don't
Wow.
think so. It's a bad outcome.
It is a fantastic outcome in investing. Making money is always a good outcome. Doesn't matter if it is 1x
Yeah,
or
yeah,
5x or 500x at the end of the day.
yeah,
Uh, but you've got a very interesting portfolio, and we've got some common companies, right? And I think we've connected over there many times. But you've got Loginex Solutions, Wellness Forever, Coolberg, Vista Rooms, Chai Break, Unbox, Bori Kitchen. Um, what was the thesis when you were picking these companies? Was there a general thesis that you were going after while picking your companies?
Well, actually, the term thesis I only understood once we launched this fund. So before this, this thesis was this thesis story was more in your own personal way. And when you actually run a fund, you understand the entire concept of what you exactly mean thesis and how to follow it. So back then, I won't say there was any particular format in terms of defining that how I'm supposed to go for it. But what commonly I used to always look for was an energetic founder, somebody who's clear in his head. Because as much as I enjoy this thought of clarity in my head that how to go about it, and the same thing I can translate if somebody is having a communication with me rather than running a presentation. I expected similar qualities, right? That the person is able to explain his business, not, and it's not easy. It looks like whoever is an entrepreneur thinks that he knows his business in and out and he can explain, but it's not the real truth to me. Because in my entire portfolio, probably this portfolio I built after meeting almost 300 plus entrepreneurs in my that journey, right? So it never happened like
Wow.
as if the first come first check I was giving. It was not like that. So yeah, I mean there were a lot of common thoughts in terms of identifying entrepreneur and his thought process. And of course it was also that space, because today is quite sexy to say that okay, we are focusing on X or we are focusing on Y. You can use all kind of jargons. But that back then, 2014, 18, it was all that where the India was evolving with so many ideas, new many space. So I managed to have my foot across all possible categories. I won't have covered the universe, but certainly 24 investments allowed me to have a color of all this kind of portfolio companies. So yeah, quite happy with that way in terms of my approach, in terms of going for these entrepreneurs.
Let's talk about two investments, right? And before we move into Rockstud, and I know we're getting close to more than halfway. We are more than halfway through, in fact. But what was, I guess, the most challenging, or maybe the most disappointing startup? Not challenging, but the most disappointing, where you had high hopes and hope it didn't work out. And what was the startup where just that you did extremely well? You were super happy with the results.
Well, honestly, I used to do that when I was an angel investor. I consistently used to look at my portfolio every month and used to do this prediction that which will give me outcome and what. So, if all that learning which I've gone through, I would say, I won't say that there is any bad startup, right? Uh, the the thing is that a bad and good is just not purely a definition of you
Very true.
making money. It also comes down to a lot of other things. To me, what typically I would, of course, advise, or by my own experience, I would say that when you invest, you should always understand the risk and aim for that upside, which whatever you are expecting or whatever the entrepreneur is able to, run through that market size, opportunity, etc. If it doesn't happen, there are 100 reasons why it can't happen. So that's okay, right? I would have lost, a lot of money, honestly, on those, number of companies. End of the day, the beautiful thing is that if any one or two of your those startups really perform well, then it really covers, maybe the lifetime of money which you probably won't even require. You might be the best example for that, Anirudh. Your own exits, are quite public. So I would say that it's not about good or bad in terms of a particular startup which probably I can name and say that okay, this is what I thought and happened. Of course, it would have happened, but I won't like to name anybody. I would say in other way that if one is only doing from that analysis of making money, probably that's not the best way to be an investor. Actually, people think that to become a successful investor, it's all about this, but it is not actually. It's more about if you care about what is happening, right, in the ecosystem. If you care what change you are looking for, your own perspective, you're looking from the economy point of view, you're looking from the people point of view. And if you can be that one small instrument or one small person who's contributing to that idea for that change, then that is a bigger objective you should fulfill for, right? Eventually, whatever else is the outcome, it can be good or bad. But if as an investor, if your only focus is to make money, then according to me, there are 100 other items, in the market which you can invest and make money rather than coming here. So it's two different things. From the investor hat point of view, I would say that at least from now onwards, I'm not doing that. Of course, as a fund, there's a thesis and you have to put those exit losses because you have a fund tenure, etc. But again, today I don't invest because I just think that I'll make a 10x or 100x. I ensure that even if you look at my portfolios, which I've built from Rockstud, it's very, very clear. It has to solve that some problem really to the market. Then only it makes sense. Otherwise, me writing a check and there are 100 players doing that is not, it's not a thing which probably excites me today.
It's so true, actually. I mean, because I think when you start chasing money, you start making dumb decisions, right? And again, without naming or even actually getting into very specifics over here, but like what you correctly said, that when you try to chase value, or when you try to chase the right things, excellence, for example, or whether the company can become a great value provider for the ecosystem that it's in, then automatically I think the wealth creation comes as a side effect, and not what you. And if you try to chase wealth creation, unfortunately it never happens, right? Because you keep making decisions with the intent कि अरे इसमें 10x हो जाएगा, or this will make it 100x, and it never happens because none of these things are under your control in the first place.
No, not at all. I'll give you one example, yes, to be very specific, because now you have touched upon this. It again comes by an experience. It's not that from day one I was clear. It's a journey of my 6, 7 years, and today I can make this comment. Back about 4 years ago, I invested in a company called Wellness Forever. Wellness Forever is a 24/7 pharmacy chain, which is currently is largest in Maharashtra and also spread across in Goa and Karnataka. When we invested, that time the company valuation was about 80 CR, and they were doing their first round. And I remember we asked all kind of intelligent questions to the founder as usual, and then comes the element of risk. Of course, every investor is always, considering what is the risk. I mean, that time the idea was they want to do this 24/7 kind of format, which was anyways there in US, UK, with established names like Boots Pharmacy, and here there was a huge gap in terms of the quality of pharmacies, right? I mean, when we go, a lot of things were not available in terms of the medicine, or the experience was very poor. So they really wanted to build something very high quality stuff, which you're getting addressing both medicines and even retail. And 24/7 was the kicker. And they already had, nice number of outlets. So I remember I asked, one of the founders was Kulshan that time, and he was answering the queries. So I asked him that what is the biggest risk you see in your business? And the answer he gave me was that my one of my outlets, anybody giving wrong medicine to the client. That is the biggest risk in my business. Otherwise, there is no other risk which I can, tell you and you can get scared. But if my pharmacist is giving a wrong medicine to the patient, then that's definitely a very big challenge, and we ensure that that never happens. And today, last year they raised the money from Alana Group, 130 crores, at a valuation of 1300 crores. This company, I had
Wow.
taken a partial exit. Partial exit means I recovered my entire capital actually. Today I would be sitting all profits, and in 2 years down the line, what we can clearly see that they will be IPO. So this is IPO business which is going to see. And just look at the journey. Today they are doing 1,000 crore top line and almost have 200 stores across this three states. So that's what is
Wow.
founders all about, right? I mean, that's all about the founders. You would have seen yourself how Oyo had scaled, and the founders all make the difference, right? Thought process is important. If the founder has that kind of thought process, he would have never told us that this is what I'm going to get you exit for. This is the valuation I will command. This is the market share I will capture. Nothing of that sort of jargon even in the entire pitch. So it was very natural, and yeah, more of addressing the market. What was the market need, and that's how he's addressed. So one of the experiences I just wanted to share, I thought would
No,
be great for your viewers.
absolutely. I think this is the moment of the show. If you would tell me, I mean, and I know we've not even got to Rockstud yet, but it's so true. So many times founders email or they'll send messages. This is a 100x company, or this is, oh, we're gonna make so much money for you. This will be your next unicorn, and you're always thinking that how do you know, right? Because you haven't even, either you're not sold enough to even know what it takes to be a unicorn. And what you said, like that that one comment, that the way the founder looks at the business is so important, because that decides whether they're chasing the right metrics or whether they're chasing the right things, right? If he had said, the biggest risk is I might not be able to raise a further round, like, if that is really what's going to decide whether the business does well or not, I don't think that we're looking at the business
Yeah,
the right way.
yeah,
So definitely, I think that's a really brilliant, and thank you so much for sharing this personal one, and congratulations on a fantastic
thanks,
investment, like
thanks.
many others. Like I think Logi Next was another big exit,
Yeah,
happened I think last year, or
yeah,
last to
I was
last year,
very lucky.
2019.
No, it was
And
2019,
you
and
were
very lucky, very lucky.
the, and so as of so before Rockstar, how many ventures had you done? before starting Rockstud?
Before
How many
starting
investments?
Rockstud, so before doing that, till the end of 2018, I managed to do 24. And interesting piece was that when I went to do this, Rockstud, when I launched Rockstud, I never had any exits. So I became
Oh
a fund
wow.
manager, delivering no exit of my personal portfolio. And once this fund was launched, in 3 months I got three exit and recovered my entire capital of my total investment in 24.
So that must have been that was good tailwind, right? For to go to the market with.
The markets, I mean, there's a different story we can touch upon when the story unfolds, but it's quite thing, the inexperience really plays a role in your life. There's nothing called you can fast track things. I was not a fund manager who had a lot of experience of fundraising. Indeed, I was the first one in my family to do a fundraising kind of thing. I mean, in Marwadi, if you are going out and asking money, I mean, that's the last thing probably your parents would think. Out here, the earlier generation always, believed in making your own good, don't take loan, and be satisfied to what you have in your house, and constantly chase growth. But or give money for debt. I mean, ब्याज में पैसा लगाने का. But you actually taking
Hmm.
money is not never a good idea. So, it was quite a hard learning of doing fundraising myself.
And you also chose. I mean, you also chose a very interesting concept to go after, right? You wanted to launch a hybrid fund where it was 50% listed and 50% unlisted. Certain similar funds may have come up in other markets, but India in 2018 was still a market that was learning how to invest in startups, right? Or what is a VC fund itself was a new concept, right? Because private equity and VC is always confused as one or the other. But you said, you know what, I'm going to go even one step further, make it a little more complicated, and we're going to do a listed plus startup fund. So
So
what was the genesis of the idea?
see what happened that by 2017 18, I was almost done with this 24 kind of number, right? And as I said that all these investments happened by my own capital, and that's a capital I made out of the profits I made out of the equity markets. So you can imagine that markets are nice, I was doing well, and that translated to this investments. Having no exit, it came to a position where I was absolutely at no place that what I'm supposed to do with my career, because I had no actually surplus money to invest. That's a real blunt truth, that I had no money to invest because all my money actually got consumed without having any exit. So I thought, okay, now this is all I have, this experience learning. What am I supposed to do? When I went in, to start this investment, my thesis was original thesis. I mean, not like a thesis word term, but my own goal was that okay, I don't know anything today. Probably I'll join hands with a startup founder and become a co-founder and run a business in startup. That was the own goal, and that's why I was investing. That never happened, of course, till all those 4 years. And then when it got over, and then I thought, okay, now I have some knowledge in this space. I'm seeing that so many of my friends like you are raising money and doing their own fund. What am I supposed to do now? So let me try to do this. So it was more of that effort. When I went to the market and met a lot of law firms, I had no idea that this strategy could have done it. Actually, my point was to focus on startups, but I realized that who's going to write a 1 CR check, because the minimum ticket size was 1 CR as defined by SEBI,
Very true.
and me having no track record of exits or any kind of background in terms of working with any kind of big VC firms or private equity, who would write a 1 CR check? And more than that, the minimum money to be raised, or minimum first close required, was 20 CR for a Cat 2 fund. 20 CR is
Correct.
what I require to start my journey. I was not sure that apart from my father, for whom also I have to convince him, who will give me the second CR. So it was an experiment where I went to the market and I met a couple of lawyers, and they said, listen, if you're not sure, then why don't you try this? What you have done already, and they have heard my story, right? What I did for this 4 or 5 years. So they said, you have already done, both this thing together. I think so. You have done well. Why don't you do the same thing in your Rockstud? I said, is it
Hmm.
possible? Because I was aware of this AIF Cat 3 and 1. They said, yeah, it is possible. The rule says that 51%. So it's 51-49, it's not 50-50, because SEBI says you cannot go less than 51% in unlisted. That's the
Okay.
law. It is silent on the next 49%. What are you supposed to do? And AIF Cat 2 allows you to do a lot of things in terms of choice of your own instruments. So the law firm said, okay, you can do something like this in this 5149. If you like that, we can go ahead and we can make our PPM draft, etc. I said, okay, this strategy might have convinced to my, let me check. I checked with a couple of people and they liked it because I was targeting HNIs. This strategy or this fund was never planned because I knew the truth that no institution would be backing me, no family office would be backing me. So where I'm going to go to? I was going to go to the friends of my father who was HNI, super HNI, and they might like this. Okay, 50 lakh rupees only in startup, I can take this risk on you, right? But one
Correct.
CR, it's a number one CR, it becomes quite huge, right? So that was the reason, I decided to do this because I was sure that by this, I could be able to raise 20 CR. And that's where, we managed to do it.
What was the whole experience like, raising capital for the first time, convincing people first of all to invest in startups and then invest in listed equities at the same time? I know we'll talk about a couple of your listed investments right after this, but what was that experience like, raising capital? Because many
Anirudh,
founders think that raising capital for the startup is difficult, but I think raising capital for a VC fund, I think that you're going to tell us how is that. I mean, that is difficult, but raising capital for a hybrid fund, I mean, that would love to hear that.
no, so first of all, Anirudh, I would say that, when I was doing my angel investments and I used to be very involved, and a lot of times I used to give this GAN to the founders. You're not good in fundraising or you're not doing this, you need to do that. ऐसा करना चाहिए, वैसा करना चाहिए. Lot of things. And when that same thing came to me, when I have to do myself for my own, venture, I mean, what to say. It was a nightmare. And more than anything else, you are in a same position of just having a presentation with no track record and no team, etc., and going in the market and doing your fundraise. And my first close is supposed to happen in $3 million because 20 crore rupees is what is the minimum requirement to start your business. So it was something, right? And I had no network. I had no network. We had never done any kind of business as I said, there was a very limited set of people whom we were dealing with. There was no client focused business which we ever had built. I have not done anything of that sort. Me finding investors, it was like finding pearls in the ocean. I mean, first you have to find those, and second you have to convince them to invest 1 crore rupees into a hybrid strategy, and that too into an unproven fund manager. I can't tell you that how difficult it was. It took me 7 months, almost 70 meetings before I managed to have this 20. Indeed, it was 28, and you won't believe what kind of names I got as my LP at that point of time. And thanks to the market, I mean, there's a different story, Anirudh. I mean, if I can just take a 2 minute, lot of people
Yeah,
typically
please,
what they
please.
do, lot of people typically what they do in a VC fund industry, they launch a fund along with some anchor, and then they go out in the market, and then they keep raising. Because I was not sure about what probably I could have done it or not, and whether this 20 CR I could have raised or not, I decided first I will get the commitment and then I will apply for the SEBI license. And that time, the firm name was also not came into picture. So Rockstud was not the name I was pitching. It was some random name on the presentation. And that presentation I was taking to the investor and trying to convince them.
Oh wow! So this is like a startup founder raising before incorporating the company, and okay.
So it was saying, and it took me about like, once I got my, 28 commitments out of that odd 60, 70 meetings, then I filed for SEBI license and then I understood what is PPM, all that new stuff, and took me about what from the time to understand those, file it and get a SEBI license. It was a 7 month journey. And after 7 months, what happens? I go and tell the investor I got my license. Now please write your check. And they say, who are you? Because I managed to sell my story at those meetings, but then couldn't able to keep up with my follow-ups because my bolu kya? Because you can't tell and say, boss, now I've gone for my stable life and it will take ages, right? They had their own process. I won't blame them for anything. I mean, in the hindsight, I don't think so that, it was more of my own learning. But after 7 months, when I went to the market, I mean, people were asking, who are you, when you came, etc., etc. Indeed, the 28 CR commitment went down to 15.
Wow.
And then again I have to fight back and meet this 20. So it was not easy journey, to get my 20 CR. I mean, I can't tell you that what are the things it went through, and it was never easy.
This is something that it is so key, and I think we did the opposite, right? I kept getting me told by, go out and raise, go out and raise. I said, no, listen, this is a big ticket investment, and until all the paperwork is ready, I don't want it because, and I think probably because of my experience in sales, because when we used to sell these long-term energy contracts, and sometimes these contracts were worth millions of dollars, right? Like there should be no time lap between the time the guy is ready to go and the signing, right? It should be like while you're on a high, close it. And I tell the same thing to founders that you cannot go to market with a half-baked pitch where your terms and your financial model, everything is not ready. Everything has to be ready because when you have the customer above the buying line, or in this case your investor, it has to go like like it has to be cookie cutter. It has to go smoothly. And I obviously I think in fund two I don't think you're going to be planning planning the same strategy as fund one.
No, I was never. I mean, to be honest, it was a wildest dream to become a VC fund manager, and on top of that, actually able to get this 20 CR with independent set of investors. And my condition was that I would not allow my father to be a 50% contribution to the
Mhm.
LP kind of thing. It was very clear in my head. Otherwise, this entire journey was bad. So I wanted to build completely independently with independent investors, institutional way, and I managed to do it. Although in today's time, if you look at any VC fund with that fancy numbers they raise, probably my standing would be nowhere in terms of typically a VC fund with what kind of corpus they're supposed to be. But from the place from where I come, and being a solo GP, I mean, to me, it was something which I managed to do it at 2018. So yeah, and again against the market, because markets were not that well. Indeed, from the time I went to do my fundraising versus when I got my license and when I went to the same people, the small cap index actually dropped by 25%. So that was one of the carnage which was happening, and then the sentiment changed. So it was very difficult to actually go against the sentiment and still do your fundraising. People, I still believe those are still angels and gods to me who have actually stood with their commitment. Otherwise, I don't think so anybody should have any obligation to honor their thing, but they have done it.
That's amazing. I don't know if you realize, but we're getting too close to an hour since our conversation, and there's so much more to talk about. I think we'll have to call you back for a new episode. But before we do that, I think before we get to rapid fire, and there's questions that I even can't go through right now. But I think I want to understand like what are some of your listed bets, and what were some of your startup bets? Maybe your top two favorite ones, or top two ones that you have done really well, because on the listed space obviously it's all public.
So as I said that for listed equity, when I thought I was damn good, 2, 5, 6 years, so many interviews. Personally, I was able to do 20% kind of returns annualized. I thought that's very simple for me to do it. And when we deployed, within the first 6 months, I was bleeding like anybody. And we like it was a nightmare on a nightmare, and we again had to go back and then understand the meaning of thesis. So after 6 months and after raising money, that's where you say pivot, the term which startups typically use. I pivoted from my strategy in terms of really getting more deeper, and then come out with a strategy called FactEdge, which is financial, agriculture, consumption, technology, and healthcare. These are the five sectors we focused on. And it took us about good 4 months in order to completely put our heads down and get into this and get all the data crunching and then come out with those names. We took a bet into a company called Granules India. We managed to enter at a price of 125. Uh, Again, to a disclosure that it's in the fund, and we still hold that stock. And today it is around 325 in a matter of a year. And a similar company where we got a very big success was Tata Elxsi and Amber Enterprise. Again, Tata Elxsi maybe 600 rupees we entered, and Amber 800 rupees. Again, we are holding these stocks in our portfolio, and all these stocks have already doubled. Probably Elxsi is 3 times, and Amber is 2.5 times. And it's all because we understood the power of thesis. So you have to
I
we
like the way you said thesis at the end. You're like such a reluctant thing I had to do called thesis.
yeah, you have to sometimes you have to bite the bullet. If you are an entrepreneur, and this is what I also try to find this quality, because I am not saying I am the best representation of my own, and it's not that way, but there are certain things which I've learned, right? And if you don't have that ability, then certainly you can't surpass me, because I've learned it hard way. So if you don't have the ability to bite the bullet, and you don't have the ability to actually say, okay, my original thought process have gone wrong, I have to now make it right and do all the right things, whatever it takes time, I will do it. That's where the differentiation comes, and then you get a success. Today, I can tell you that these companies, I mean, to that extent, would you believe that we actually wanted to make it a lot of public? We wanted to showcase the way how we do our research. So we started writing blogs, right, on Medium, and we have actually written our entire thesis on Granules India on Medium. Would you believe that that went to the IR, the investor relationship of Granules India, and the founder actually gave us a compliment that this is one of the finest piece we have seen in the recent times as far as the coverage comes. Somebody who's an investor writing it. Typically, the analyst write all kind of targets. This is one guy who says that I've entered in this and I've made money. So it's very refreshing. So that was the compliment I get, and I believe that if you do right things, you will get the voice from the god. So yeah, it was brilliant from that point of view, with the small start what we had from the listed equities.
So Granules, Tata Elxsi, and Amber.
Yeah.
Let's talk about your couple of startup bets, because I have to get to rapid fire. Otherwise, we're going to be sitting here till midnight.
So, for startup wise, I mean, predominantly so far, it has been 1 year since we have been building our portfolio. Today, our portfolio stand with 6 startups investments, and one of the common one which we have is Everest Fleet, which we both commonly share. The last one we did was InStoried, which basically was onto emotion based AI tool, which they actually got. So it's to simplify, in a Word document, when you write your 250, 300 words in a single page, and if you have made a grammatical error, those are the things which a auto spell check would do it for you. But if that 300 words, uh, if in altogether has to put across in terms of emotion ranking, then certainly there is no tool available. Indeed, if that same 250, 300 page has to go out in the media or to your publishers in terms of whoever, then even they won't know that, okay, what exactly, how much emotion is correct or not. So this is the emotion correcting tool, where it is auto suggesting you to change those words which might not be appropriate, and probably your 250, 300 words what you have written probably is going to stand a lot of, let's say, 70% emotional, 30%, like that. So they give you that, balance, what balance you are actually, intend to, and giving you right words to change. And all this thing is done in a real time, the way how you do it in Word. But this is one of a kind. And, Shamin Ali, who's the founder, and amazing story of a home. So that's the last deal we did. And we believe that, if it clicks, it can be the next big thing. And Lilac Insights, which is specialty diagnostic business, we managed to get into because of, thank God, to COVID, and that was the time when we got some interesting deals. So yeah, that these are a few names which we believe that are quite interesting in its own, ways.
And are you still investing, Abhishek?
Yeah. So the best part was, 2 years after, the last month was the first time we actually raised money. In 2 years, we couldn't able to do anything because the 1 year went in COVID, 1 year went in learning. And in March alone, we actually, managed to raise 50% of the money which we have raised 2 years ago. So yes, we are investing, and hopefully now we'll be building much better portfolio. Otherwise, I thought my journey would stop at these 6 companies, but thank God today at least the visibility is far better than what probably I was in. So yes, we are doing it
So we're
actively.
going to see you in a lot more boardrooms like this, evaluating startups.
Yeah, this was the time pre-COVID times where this luxury of meeting people was there. Now everything is virtual, and you have to get all the possible senses out of this. So yeah, these are the typical
So
sessions.
before we move to
Yeah.
rapid fire, I'll quickly ask you, like, when should a founder contact you? And like, do they have to be pre-revenue, revenue, and secondly, how should they contact you? I think when and how, both. If you could answer
So
for
we
the
so
people
we
watching.
we are a pre-series A fund, and our model is to do co-investments along with other institution investors. All the requirements typically in terms of the revenue or in terms of the checklist is available on our website specifically for this, so that people get to know. That's where you have done your revenue is already there. You are already there above certain milestone, etc., etc. Those are things we see. So we look at all of combination rather than only into silos. And the best way to reach out to me is, email ID call as deals@rockstudcap.com. That's where, all the deal flow comes to us. Or you can actually also apply through our website, which is quite robust, and all the details are available. So these are the two methods one can reach, and we are definitely open for investments. We are doing it. Last month only we did in story, and hopefully, we should be doing it more in this year.
Fantastic, fantastic, and I promise you there is a lot more to talk about, Abhishek. We have to bring you back for talking about the journey of raising capital, and I think at that time, we'll have maybe a lot more anecdotes about the extra money that you've raised and what you're doing with that capital. But we have to get into rapid fire, and hopefully, if we can finish this rapid fire in the next 5 minutes,
Sure,
we'll take a few audience questions. So if anybody has
sure.
questions, please go ahead and ask in the comment section. But are you ready? The rules for the rapid fire are very
Yeah.
simple. I'll ask a question. You whatever first comes to mind, you have to you go ahead and answer. So I'll ask you the first question, and it's an interesting one. Elon Musk, Jeff Bezos, Bill Gates, and Donald Trump are coming for dinner. What's the plan?
Well, the plan is, to ask them that. I mean, honestly, if all are coming together, then probably have to run out. So because it's
Why is that?
impossible to manage all the brains together in one table. Probably they might kill each other.
Good one. Okay. When do you get your best work done? Morning or night?
Night.
Night. So if someone's emailing you, they should email you at night.
Yeah, probably. I mean, I'm more of a night person.
Uh, let's see. What is the first name that comes to your mind when you hear the words successful entrepreneur? What's the first uh, name that comes to your mind?
Well, Nikhil Kamath,
Nikhil Kamath,
Zero Tha.
Zerodha's founder. Great, and a unicorn that is bootstrapped. That's amazing. Built on customer capital.
I would
Uh,
say that it's not the matter of the unicorn. If you just even yesterday he has put his thoughts for fundraise because he keeps getting the request for fundraising. Actually gave a clarification, a beautiful understanding. So I think so. It's not about that the status of a unicorn, the thought process. Right now, I understand that once you get your right thought process, the kind of impact you make in the ecosystem is unbelievable. So amazing thought process. I mean that's what I appreciate more than just an idea.
No, again, and unicorns just a tag. I think it also it signifies an achievement for certain companies, and I think in that sense, it is a very unique opportunity of a bootstrapped unicorn startup, right? I don't think
No,
it's
totally.
heard very very rare in any ecosystem that you could imagine. Who's your favorite superhero?
Superhero. I mean, I love all the superheroes honestly, but I think so. Iron Man is something which I would like to because it comes down that science, technology, and human element together.
Great. And do you have any favorite failure of yours?
Well, probably I can write a book on that.
But what's the favorite? What's going to be the first chapter? Let's talk about that. What's the first chapter going to be?
So chapter will keep changing now because today what I learned and tomorrow again I would see that okay that was my mistake. So that way I won't say there was any favorites of that sort. Indeed, it is so many scars on back that probably, as I said, that require a book to write. So no favorites in that.
No favorites. Lots of failures to talk about. Good. What's one thing you would like to change about the Indian startup ecosystem?
I think so to have more, I would say trust, trust and belief. Because, still, if you look at the kind of stakeholding of these unicorns and you look at who are holding this, stake shareholders, they're still quite foreign entities, right? And that's where, you're selling out quite soon, according to me, if you look at most of the global names. So I think so you need to little bit hold your, thing and go for it rather than just doing everything so fast. I think it's better to hold something and then grow rather than give everything to the outside investors because they would be holding 50-60% and then really can't become more than unicorn, right? Everything is just chasing unicorn. I think so we need to understand there are three more steps ahead of unicorn. So
One piece of advice you would give to your 18-year-old self, and it cannot be that you should have done your paperwork before fundraising.
no, I would say to be focused, absolutely focused. No fun time as that says that anything is going here and there. You need to be focused to what you are committed to. So I think so more commitment and focused.
Be focused, be committed. That's two very very important points. Let's see. What company in your anti portfolio hurts you the most?
Every year it comes new one, but from the fund I'll tell you it took us again like similarly in my personal experience to do my first deal took me 6 months from my angel investment, as I said, quench here. it took us about 8 months to actually crack our first deal. And eventually, that company, I don't want to name that company, but that company actually went to raise money from Surge. And in just 1.5 years period, today their valuation is $500 million. So, probably with that first name itself, I would have, been one of the famous names here because it was quite fast.
Good, good one. I'll ask you two more questions. I think, let's see. What is a business you wish you had founded? And I guess I know the answer, but
I would say, I mean, why Zerodha can't, I mean, why Zerodha has done it, why I have not done it. I mean, that probably only in the thought process I can think about it. A fintech company is certainly considering that, I am so involved in the system and still, myself, neither I have any company in my portfolio, neither I have done it. So yeah, I mean, that's one regret probably I hold today, and hopefully I should be able to do in future if I get that opportunity. But yeah,
and last one piece of advice to founders about fundraising.
take the money when it comes to you.
Take the money when it comes to you. So true, so true. You keep holding out. The next thing you know, that money won't be there anymore. So I'm going to take one audience question, and I know there's a lot of questions coming in. Let's take Pakshal Jain's question. What do you think is a good time to exit out of a startup?
Well, exit out of a startup, when is a good time? First good time can be when you actually get offered, right? And that time you get excited. And only in the hindsight, if you think that that startup actually was the last peak what they made and they would never grow from there, then that's probably an answer. So probably, I would say it's never. But if you get one, take it. So it is either of the two. Because if you have taken it and then if you had the option to retain, you will always regret. Probably Anirudh, you will be the best person to to take that when one has to take an exit from Oyo and then eventually seeing that at what price you exited versus what real valuation happened. So it's chicken and egg, right?
We both come from the stock market background. My dad always told me once you buy a stock, never look at the stock price unless it is the time that you want to
Yeah,
sell. And when
yeah,
you sell a stock, don't look at the stock price again because you sold, right? So forget about what has happened after that. Move on in life.
yeah.
So great. Thank you so much, Abhishek. That brings us to the end of the episode. We still ended up doing 75 minutes with the full
Wow.
intent of doing an hour. Thank you so
I
much.
thought 30 minutes.
Any final thoughts? You thought it was
I
30
thought it
minutes.
was.
It did feel, yeah. And you told me like there's hardly going to be 30 minutes of conversation. And trust me, we haven't even completed what we wanted to complete. But thank you so much. Any final
No,
thoughts for the people that are still watching and commenting?
no. First of all, it's a great show. Thanks for hosting me, and you have been an amazing host. And this amazing show helps people to reach out and really brings the best out of people who have a story and can learn. My final thoughts are, this is no other time. This is the best time of our country, India. And believe me, next 10 years, we are going to see $10 trillion in terms of our own size. And today is the best time to be entrepreneur, no matter whether you become an investor as a business, what I do versus any other form of, association. But best time to be entrepreneur and go for it, believe in your dreams and yeah, keep learning.
Th- those are amazing pieces of advice. Thank you so much, Abhishek. Just hang on. We're gonna say good night to everybody, and again we'll be
Yeah.
back next week with another founder, and and hopefully Abhishek, we get to see you once again once you've got once you sold Tata Alexi and you're probably got some dollars or rupees right behind as your background from all the carry you've made.
My pleasure, and thank you so much. And good night, everybody. Good night, folks. Thank you for again hosting me.